Hello guys, welcome to my YouTube channel once again. In this video I'm going to be giving you reasons why you as a crypto holder should consider trading your crypto on Binance or should consider trading your USDT on Binance. Alright, before we get into the business of today, I'd like to give a disclaimer. This content has strictly been provided for educational purpose only. It's not to give any financial advice. If you require any financial advice, please see a financial advisor and he will do justice to your inquiry. All right, let's begin. Now, what is cryptocurrency? Now, if you're thinking about cryptocurrency, you are talking about any currency that is digital or virtual. Carry out such transaction in a cryptograph. Now, but trading that cryptocurrency is actually an art of speculating the price of that cryptocurrency. So it's either you are speculating that the price will go up or it will go down. And this trading occurs in an exchange. Now we have two types of cryptocurrency trading. We have the spot trading and the futures trading. In spot trading, you buy and sell cryptocurrencies such as Bitcoin and Ethereum for immediate delivery. So what I mean is these cryptocurrency are actually transferred to market participants. So from a seller to a buyer. Given this scenario, you have a direct ownership of that particular cryptocurrency and you are entitled to any economic benefit that comes with such crypto. But in futures trading, you do not own any cryptocurrency. All you do is own a contract that gives you the permission to sell or buy any cryptocurrency at a later date. This is why in futures trading, traders can decide to long to wage on a price advance or to go short to anticipate a price drop where they are free to sell it at a later date. Now, what are the differences between a spot and a futures trade? Now, we have flexibility to long or short. Now, if you hold cryptocurrency in the spot market, for example, you may benefit from the capital appreciation as the value of your cryptocurrency increases over time. You do not profit when the value tends to go down. But in futures, you can actually profit from any short-term movement in either direction, whether the market is going up or it is going down. So even if the price of Bitcoin falls, for example, you can participate in the downtrend and profit as the price tends to dip lower by going on the short trade. Another difference between a spot and a future trade is the use of leverage. Now, if you are using leverage, you are trying to maximize your capital efficiency. You are trying to make your capital better as a trader. So, in such case, you do not have to lock up your entire capital inside a particular coin. So, when you are using leverage, you kind of maximize the potential for more returns, more profit. But you should also note that your risk tends to increase, which is why you should exercise caution as a futures trader. Now we also have liquidity. Now, with trillions of dollars in monthly volume, the crypto market provides deep liquidity, especially on Binance. Binance is the largest cryptocurrency exchange in the world, and as such, there is a large pool of liquidity for traders to leverage from. So if you're talking about liquidity, you're talking about the amount of volume in a particular crypto trade, such that when there is a large amount of money in the pool, when you place your order, it executes instantaneously when that particular price is hit. Now, what you should also know is futures trading is used as a hedge. So, investing in cryptocurrency futures offers more opportunities and potentials to grow a portfolio. So it just enables you to enhance your portfolio multiple fold. In fact, even with just a single trade. But what you should know is protecting your portfolio can be challenging, especially if you are just a spot trader. So that's why you have to leverage on the futures trade as a strong line of defense for your portfolio, which can serve as a hedge when investments are moving in the wrong direction. Now, like I said before, Unlike spot trade that benefits the investor when the price is trending upwards, futures traders can actually profit when the price is falling by shorting the market. It gives investors more fluidity and the freedom to speculate on what the near term price of action of an asset will be. So you should learn how to use hedging because it will enable you to protect your portfolio from any downtrend in the market. All right. Now, I'm going to be showing you how to enable the edge mode on Binance. By default, this mode is not activated. So what you do is first at the bottom of your screen, click on futures. After then, you can click on these three dots at the top. Then your features page will appear. Then select preference. After you select preference, you find position mode settings. Click on this arrow over here and select edge mode. After you select edge mode, your buy and long will automatically be changed to open short or open long. Now for your desktop, simply click on this icon at the top right over here. Then you click on preference. After preference, you have your position mode, then you select your edge mode. If you notice, before we selected edge mode, we had our buy and long, our buy long or our sell and short. So after we converted to edge mode, we now have open long and open short. Okay, I'm going to give you an example of how to use hedging on Binance. Now, after activating your hedging mode on Binance, now let's say I want to trade Bitcoin. This is Bitcoin at $40,945,000 per Bitcoin. Let's say I want to trade this coin, but I do not know the price movement of this particular coin in the future. So I will open a long and short position at this point one simultaneously. So when the price begin to rally up, my long position will be in profit and my short position will be on loss. Let's say for example, I use equal amount and equal leverage. My profit and my loss will help to neutralize one another such that I will be on zero profit and zero loss. So what I will do is now BTC has rallied up to this point. Now having rallied up to this point, I expect that BTC will retrace a bit. So what I will do, I will close my long position which is in profit, and later after a little retracement, I can close my short position. So looking at my portfolio from a holistic approach, I will observe that my portfolio is on profit from that particular trade. So in this section, I'm going to be talking about market neutral strategies in trading cryptocurrencies. Now, what is a market neutral strategy? Now, market neutral strategies involve opening long and short positions simultaneously to take advantages of inefficient pricing between two crypto assets. So when you are using a market neutral strategy, your profit is going to be determined from the relative price change between two assets instead of the direction of each moves. Now let's say for instance, Bitcoin is oversold and Litecoin is overbought. Now, if you are talking about oversold, it means there has been too much buy pressure to the extent that it has gone too low. So at that point, you are expecting that okay, Bitcoin should make a little retracement, it should go up a little bit. So what you should do is you open a long position on BTC and then you open a short position on FTC. So in that way, you are trying to benefit from two different movements of the crypto market using two different coins. Now that's how this market strategy helps you to benefit. It's synonymous to using the hedge. But for hedge, what you do is you are going short and long on the same coin simultaneously. But for a market neutral trade, what you are doing is that you are going in opposite direction. Now, how does the market neutral strategy benefit traders? It benefits you through risk mitigation, through diversification, and through volatility dampening. Now, if you are trying to trade traditionally, let's say you are trying to trade a particular coin, you either go on a long or a short. So that way, your your profit is going to be determined on the movement of that coin in that direction that you are anticipating. But for a market neutral strategy, since you are not depending on just one particular coin to make profit, it helps you to reduce your risk, and most times it helps you to maximize your profit. You just need to be a little bit patient. Now, a great advantage of market neutral strategy is that it emphasizes on constructing portfolio to minimize risk. Now, there are two types of market neutral strategies, but for the sake of this video, we are going to be mentioning just two. We have the basis trading and the statistical arbitrage. So for this video, we are going to be talking about the statistical arbitrage and how statistical arbitrage involves using quantitative method to uncover price discrepancy between two cryptocurrency assets. Now, based on this quantitative finding, traders bet on prices of selected crypto assets by opening either a long or a short position simultaneously. Now, to construct a position, trader must select crypto assets that display a strong relationship using statistical methods such as correlation or co-integration. Now, this is a chart showing large cap cryptocurrencies and is showing the correlation values of each of these coins. Now, correlation can range between -1 and +1. What we use correlation for is to measure the degree to which two securities move in relation to each other, and it is mostly used in advance to manage our portfolio. Now, if for example, take for instance, this is Ethereum USD and this is BNB. If you look at the chart over here, you see that Ethereum USD has a very strong correlation with BNB. It therefore means that if, for example, the price of Ethereum is increasing, it therefore means that sooner or later BNB is going to follow suit. So in such situation, when you notice that the price of Ethereum is already soaring higher and BNB has not started moving, it will be very wise for you to go on a long on BNB. Summarily, market neutral strategy is a very valuable alternative to going on long only on a particular coin, as that can sometimes go south if appropriate technical indicators are not used. Also have the highest correlation for Ethereum. Yeah. All right, now I'm talking about leveraging again. Now, like I said in the previous part of this video, leverage allows better capital efficiency because you do not have to put in all your capital into the market. Now, although this is very good, but a lot of new traders tend to fail because they use excessive leverage. Although leverage helps you to increase your profit, but you should also know that it is unsustainable, as any little mistake can actually wipe out your capital. We are humans and mistakes are inevitable. So in order for you not to wipe out your capital, it is as advisable you use a very low leverage in order for you to preserve your self-esteem, and you also get a chance to learn from your error. Now, aside from leveraging amplifying your losses, it also amplifies your transaction cost. Now, if I'm talking about transaction cost, let's say for example, I have deposited 500 USDT in my Binance Futures wallet, and I decide to open a position on BTC that is a 100x leverage position, which means 100x times 50, meaning I'm putting in a total amount. My exposure is now $50,000. Now, considering the standard taker fee, I'm talking about the fee that Binance will charge. Considering the standard taker fee, 0.04% of this cost will be 20 USDT, which will be your transaction cost. That is 4% is already out of your account with just one trade, and the market has not even started moving yet. So you are noticing that you already have a 4% loss, and you have to take this into account in calculating your overall profit and loss. So before you know it, your balance begin to shrink if the position goes wrong, thereby increasing your effective leverage. Now I'm going to be showing you how leverage work. just like the example I gave. Take for example, I have just $100 in my account, and I decide to go on a position of 10x. So it therefore means I am borrowing 900 USDT. I have just $100 and I'm going on 10x. 10 times 10 is $1,000. I do not have $1,000 in my account. It therefore means I am borrowing $900. So after a 10% increase, my profit automatically double, which means I'll now have $200 in my account. So if for example I bought BNB and BNB does a 10% increase and I did a 10x on that coin. So with that 10% increase, 10 times 10, I'll have a profit of 100%, which means I have an extra $100 to my account. Now I'm going to be talking about 10 benefits why you should trade on Binance Futures. First, we have Binance has over 500 trading pairs. Now, one thing you have to understand is that Binance Futures offers a huge selection of cryptos, and there are more than 530 crypto to crypto trading pairs on Binance, and this enables users to trade anything from DeFi tokens to meme coins like Dogecoin and Shiba Inu. New coins are constantly being listed to provide traders with the best trading experience. And we also have highest liquidity. Now, because of the enormous selection of trading pairs, Binance Future has become one of the most liquid derivative exchange in the. Now, traders can expect their buy and sell orders to get filled promptly without having to worry about any slippage issues. Now we also have low trading fees. Now Binance is the largest cryptocurrency exchange in the world, and another attractive benefit for or benefit is its low fee structures. So when you are trading on Binance, the fee is low compared to other exchanges, and this fee can even be further reduced if you are trading using BUSD, or if you are even holding BUSD or BNB. Now we have wide range leverage. Now Binance Futures also provides a generously wide range of leverage for accounts with a balance of $0 to $50,000, so that every trader can grow their portfolio no matter their account balance. So if I have just $10 in my account, I can trade on futures. If I have $20, I can trade on futures, and constantly I will build my portfolio as time goes on. Now we also have short selling. Now the most fascinating part is the ability to make profit regardless of market direction. With Binance Futures, traders can sell high and buy low, or buy low and sell high to benefit from any price fluctuation while implementing different trading strategies. Now, Binance also has 28 million active users, and over the years, Binance has built a strong reputation to the point that many people worldwide would argue that if a crypto is listed in Binance, it is a legitimate project. And Binance also has the largest trading volume, and this has helped to push trillions of dollars into the crypto market. As a matter of fact, Binance was responsible for $7.7 trillion in crypto exchange volume in just 2021. So you see now, then we also have enterprise grade security. There's a saying, with great power comes great responsibility. So that's why Binance has built one of the most secure trading platforms in the world, where users can enjoy different features such as KYC, 2FA, anti-phishing code, even your Google authentication. In some cases, you can even activate your Google authenticator in order to protect users against other nefarious actors. Now, number 9, we have 300 million insurance fund. Now, users can be rest assured that their fund is safe in Binance, because Binance has an insurance to help protect backup traders from adverse losses while ensuring that a profit of winning traders are paid out in full. Last but not the least, Binance offers support in 17 different languages with an incredible intuitive and easy to use user interface. And this makes sure that any trader from anywhere in the world can participate in the crypto revolution. Now that you know a bit more about what Binance has made, don't get left behind. So now that you know a bit more about what has made Binance such a dominant crypto exchange, you can probably see why it is the preferred trading platform among futures traders. For me, I trade just on Binance alone. So with hundreds of tradable assets, massive trading volume, and a very good global reputation, you can see why every trader trusts Binance, which is why I'm imploring you to use Binance for your futures trade. If you have enjoyed this video, please click on the like button and click on the subscribe button. You can also pin on the notification bell so that as I release subsequent video in the future, it will come to your doorstep. Alright, see you next time.